So the ACCA have helpfully come up with an ethical decision framework. It's quite straightforward. You say, right, what's the real issue here? And therefore, what's the fundamental principle threat to us? Now, let's just go back to our auditing knowledge. Fundamental principles, you have to be confidential, you have to keep objective, you have to have professional competence. Remember we mentioned those two in the last video. You have to have professional behaviour and to stay independent at all times. Now they're all good things, but you're going to get threats to those: self-interest threat, self-review threat, advocacy, familiarity, being intimidated. So all of these things will affect our ethical decision making. So the ACCA says, right, okay, you've got this threat, we understand that. Now, is that threat significant enough? If it is significant, can we put safeguards in place then to stop this threat affecting our decision making? And in doing so, can you then look at yourself in the mirror and say, yes, I've done the right thing? Now, how does all that get examined then? Well, a couple of scenarios really. First one is the boss or somebody superior asks the employee or asks you to do something not ethical, or to do something that's not following IFRSs. Okay, and the other one is that an employee or you discover and you need to respond to this not following IFRSs, or being asked to do something not ethical, or something not ethical has been done. Okay, so very, very similar. So let me give you an example. Boss asks you to secretly, there's the key word there, secretly, never ethical, is it? Why are you doing it secretly? Find something out about a competitor because your brother works there. So the issues here are self-interest, because you want to please your boss, but you know that it's not ethical to do so. You know it's not the right thing to do because why is it being kept secret? And you're not showing professional behaviour here because you're having to deceive your brother by doing it secretly, and the FD's not showing professional behaviour by asking for it to be secret in the first place. And so therefore you've got a decision to make. Should you report your boss to the ACCA? Obviously you don't follow your boss's instructions here because you couldn't look yourself in the mirror afterwards. Okay, another example I think. The finance director gets share options and a profit related bonus. The finance director wants to retire next year. And the finance director now also wants to change your depreciation policy from straight line to reducing balance, and also wants to change your revaluation policy from cost to revalued because property prices are going up. Now, some of the issues then, getting share options, etc. That's fine, it's a good thing because you're aligning your objectives with the owners. They want share price to go up, they want profits to go up. But the downside of it is it can be very short-term biased. If you know your share options are coming next year, you want next year's figures to look really, really good, even if it's to the detriment of further years. One way around that, it's not the complete answer, but one way around that is to make sure that all your share options don't vest at once. Maybe they vest every single year for the next 10 years or whatever. Now there's the other issue, isn't it? That this finance director wants to retire, so therefore they naturally have this short-term bias that we have to be very aware of. So they've got a very short-term self-interest. And then we need to therefore be on our guard. We need to be aware of any potentially inappropriate accounting. And not surprisingly then, this always comes in subjective things. So they want to change something subjective, such as an accounting policy. So now we're on red alert. And the changes in the accounting policy, well, you say in the exam, you say, well, IAS 1 says everything should be presented fairly, which basically means follow IFRSs and the conceptual framework. You can only change your accounting policy if it gives more relevant, more reliable information to that wide range of users. You cannot do it just because you want profits to look good. So you'd have to question the motivation of the finance director there.